In this presentation, we will take a look at balance sheet report options within QuickBooks Online. As we do so, note that the options for many reports will be much the same as the options we will take a look here at for the general options for the balance sheet reports. So when we go to the reports later on to different types of reports, we won't get into much detail or as much detail here in these options because they will be much the same, although we will use those options for later reports. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Here we are on our test file, Greg's Design and Landscaping Services. We're going to go down here to the reports. So we're going to select the reports. We're going to go into the balance sheet, the standard balance sheet, probably in the favorites. If it's not, it's going to be in the business overview within the balance sheet. Note that it opens up here to just the display of the balance sheet. If we scroll up a little bit, however, then we'll get some of the options. We're going to explore some of these options here. If we select this item back to the report lists, we'll go back to the report. First thing we need to do with the balance sheet is select the date range, and there's a couple different ways that we can do that. Note the default date range we have here is January 1st, 2018 to December 31st, the year that we're in at this point. That will often be the default setting. That can also be chosen by this item down here, this drop down. Before we go into that, however, let's first think about what the balance sheet date is. If we go down to the balance sheet as we discussed in prior presentations, we'll see that it only has one date. There's no beginning date. It just says as of December 31st, 2018. Why then do we need a beginning date? And the answer typically for a balance sheet is you don't. It could be for a week ended. It could be for the month ended. We will still have the same numbers here within the balance sheet as long as the end date remains the same. So why would it matter? And let's just demonstrate that for a second here. If we go down to total assets, or if we minimize all of this, and we say, all right, here's total assets 23,436, and I change this beginning date to 06/15/18, and then we go ahead and run that report, then you'll see if we minimize this back up once again, we still have 23,436. There's no change. Data happened, things happened, but it's still the same because the end date is still December 31st, 2018. The beginning date doesn't affect our numbers at all. If we go back to 01/01/18, so January 1st, 2018, and we run that report, we're still going to get back to that 23,436.29. So why does it matter? Why do we need a beginning date here? What does this date range do for us? One of the main things it does for us is it allows us to go through and use the quick zoom feature to see what's going on within the report. In other words, if I want to see the detail for this checking account and I want to see it for the year, it doesn't make a difference for this number at total. But if I select it and I use the quick zoom feature, now I see detail for the entire period, the entire year. And there's only data from 7/22 on, but we see data for the entire range. Whereas if I go back up top, back to the report summary, and I changed this to just one day, 12/31/18 to 12/31/18, and run that report, then we're going to go back in. Same number here, didn't change, but if I go into it now, there's no detail. And if I want to see the detail, then I have to change the date in this report. So that's one reason why the dates are important. The range is important and not just the end date, even though we're talking about a balance sheet which only has one date typically. So if we go back to a report summary then, note up top we can change. There's also other reasons we can have. If we have different formats of the report we'll take a look at shortly, then that's another reason why the ranges could help. If we have something other than just a standard balance sheet, a comparative balance sheet, let's say, then we'll need the range as well to help QuickBooks to format this report. So if we select this drop down, we're going to have some other options like today, this week to date. These are just normal ways that we break up time. So we got the year being the normal way to break up time, and then we got the days, the weeks, and whatnot. So this is going to be a quick way, a quick setup that we can quickly go to our date ranges. However, if we need some kind of custom date range, then we could just put, of course, any custom date range that we want. So I'm going to go back to And also note the way to put this in as easily as possible is to just say 01 if I want January 1st, 2018, 01/01/18. I don't put any dashes. I just put 2 digits each time for whatever the date is. And then I'm going to select tab to go to the next report, the next range. And we're always going to have to run the report for it to then refresh, typically, if we're on the settings as they are. So we'll say run that report, and it'll refresh down here, and that'll refresh the numbers and the information. Next item we have, the next option we have is to display columns by. So when we think about the default with the display columns, it's the total. That's what we're going to display. We have the balance sheet, and it displays the total as of the end of the year, December 31st. But we do have some other options we can choose here if we select the drop-down. Typically, we'll choose something like the months or the quarters oftentimes for something like this. If we choose months then and run that report, then we're going to have all the months that are going to be broken out. The date, there's no data for some of these months, so of course nothing is there. But now you're going to see for the month end. So what does it mean for the balance sheet? If we're entering data for the month, it's always going to have the month end information as of the end of the month, as of the end of the month, as of the end of the July, as of the end of August. So that's one way for us to get some kind of comparison data. And to do that then, we would need to have the range up top and then the months. So if there's no data, for example, in June, we could say we want it from July. I want to say 070118, 070118. And then run that report. And now it's by months for the months that we have. And that's one way we can get a nice comparison or a monthly comparison. We can do the same by quarter, which would be typical. And if we did it for a couple of years, we can do that by year. So that'll give us a comparison. We're going to go back to the totals only now and run that report. So back to the totals. We then have the show non-zero or active only. If we select the options, we have the show rows and show columns. We have active, all, and non-zero. The difference between these options is that usually if we see a report on the balance sheet and we have any zero balance in, say, any particular account, then we wouldn't want that zero balance reported on the balance sheet. We don't need a zero balance here. If there was nothing in the account, we don't want it on the balance sheet to be displayed. It's just going to take up room. For example, if this undeposited funds had a zero in it, which could often be the case if we had already deposited all the funds, then it would be a 0, and we wouldn't really want to display it all the time if we were going to give this report to somebody else. However, we may want to show the 0 balances if we want to use this as kind of an auditing tool, to double click on it and be able to zoom into the activity. In other words, this might have a 0 balance, but there might be detail in it, and therefore I'd like to see the 0 balance so that I can use the quick zoom feature to go into it and look at the detail. So that's going to be some options to either show the zeros or not show the zeros for reporting purposes and for just basically usage purposes. The next option is to compare another period. To look at this option, let's first change our date to just a month. We will use the month of November. So we got November 1st, 2018 to November 30th, 2018. Then we're going to go ahead and run that report. So we'll run that report and we'll see just for the month. And again, it's just the month ended. We only see the end date here. But the date range is important when we start to think about items for the comparing another period, because now we need to think about how this will work within the system. So let's, for example, see what we have here. If we select this item, the first option is to have a previous period. So if we select the previous period, then what's going to happen is it's going to compare to the previous period. So it needs to know what the period is, meaning it needs to know a beginning date and an end date. So it needs to know that this is a month. And so if I select the previous period and run that report, we then see our comparison. So we've got as of November 30th and as of October 31st, 2018. Note that it put the most current month first, November 1st and then October. So that's because this November you would think would be the most important month. It's the latest month. So rather than going in chronological order from October to November, it's going from the most current back to the prior month. You may also recognize this and say, that looks similar to when we chose the months item. If I had the total when we chose months, it would then compare the months. This is similar to that. It's slightly different, however, because when we chose the months on this side, it put the chronological order, October 1st and then December. So you have those options by choosing one of those two between similar reports. If you'd rather have October 1st, then you can use the months item. If you would rather have the current month first, then you can use this method for at least a 2-month or 2-period setup. Note also when you use this totals, if I was to change this to months, then you would have to change the date range to include October and November, and then choose the months change. Whereas if you're using the previous period, then of course we have to select the current period that we're in, the current month, and then the system will pick the previous month to it. And so we have to know how that's going to work. It takes a little bit of time to really kind of figure that out and be able to put that in well. Notice there's also some other options here with this previous month as well. So if we select this item, we also might want the change. So the dollar change, that could be very useful. We're going to go ahead and run that report. Now we've got the difference, which would be exactly what you would expect. We've got November minus October. We have the current month first minus the previous months gives us that change. Current month minus previous month gives us that change. So then we have the change on the right in dollars. Very useful to have oftentimes. Next one, we're going to select this again, and we're also going to choose the percentage change. So we'll choose the percentage change and run that report. Let's do that again, run that report. Now we have the percentage change here. What is the percentage change and why is it necessary? Well, if we take our calculator, we're going to say, all right, here's the change was 431.08 divided by the prior month, which is actually October, 4287.45. That gives us, if we move the decimal 2 places over, 10.05%. Who cares? Why does that matter? Well, it matters because the dollar change, if I was to compare this to another company, say some other landscaper, let's say we're comparing this to a very big landscaping company and we're trying to benchmark ourselves to them, we can't look at the dollar changes because we can't look at those because they're going to have different dollar amount. They're going to be a lot bigger than we are. But we can compare things like the change in percentages. And that's often the case for many, many kind of measurement things that we will have. The percentage is what we're going to need in order to make comparisons to things that are of different sizes, but related in some way. So if two things that are, for example, in a related industry, two businesses in a related industry, but of vastly different sizes, we still want to compare performance. We can't do so with a dollar change typically, but we can do so with percentage changes. Same idea if we're comparing people like batting averages and whatnot. We can't compare two people that had different amounts of at bats. They got more chances to hit the ball, in other words. But we can compare their percentage of how they did compared to how many at-bats they had. It's not perfect, but it's one way that we can make that comparison. Next item, if we scroll up top, we have the previous period. Now we're going to try the previous year. So if we select the previous year, we'll do the same options. We'll do the change and the percentage. And we look up top and we have November 1st through November 30th, the month of November. Now we want to look at the previous year, that same time period. So we're going to go ahead and run that report. See if it ran this time, run that report. And now we don't have any data for the previous year of November, but you can see how this works. We're going to have the November of the current year, and then it's going to go back to the same point in time in the prior year. So I want to compare what happens seasonally in this case in November from this year to what we did just comparatively in November of the prior time period. Same kind of thing with the change, which will take the current period minus the prior year, and then the percentage change. Next one we're going to consider is going to be, let's take a look at the percentage of columns. So I'm going to uncheck this item. Once again, the month of November, let's take a look at the percentage of columns. So we'll select that item and run this report. Once again, run that report. And now we've got the percentage of the column summary. So it's kind of a vertical analysis. How does this work? We pull out the calculator here. We're going to say here we have our cash. That's at 3856.37, and we're going to compare that to divide by total assets, which in this case is 22. So we're going to say 22,357.54. That gives us that 17.25 percentage. So that's going to give us how much cash is in relation to the total assets. Again, a type of comparison that we can make a comparison to other industries that clearly could have more or less assets than we do, but we can still make a comparison, say how much cash do they hold on to in comparison to their total assets. Now we're going to go back and remove this. We're going to take that item off and go ahead and run that report once again. We'll run that report once again. And then we have our options up here for the accounting method. We've got the cash method and the accrual method. The accrual method is the default. That's what we typically think of in accounting, the accrual method. The cash method is going to be something that's going to be based on when cash was given, when cash was received. Now note, either method is not perfectly accrual or cash just because we chose the cash or accrual entry button. But the system will be based on different things depending on what item we use. In other words, if we had a cash account and we run that report, then we shouldn't have anything involved accounts receivable, because accounts receivable is an accrual account. We wouldn't record any transaction until basically the cash is received. So there's a different point in time under the cash and accrual method as to when we will recognize and report revenue and expenses. And for QuickBooks, there's certain kind of triggers as to when we report the revenue and expenses on an accrual basis versus a cash basis. On a cash basis, of course, we do that when things go in and out of cash. And that's something that can be seen in QuickBooks by the forms of the deposits and the checks. On the accrual method, the driving factor is supposed to be when we actually, for revenue, when we actually earned the revenue, and for expenses, when we incurred the expenses. And so on an accrual method, that would be the driving factors, the driving forms would typically be an invoice. Not perfect, but closer to the point in time where we probably did the work, as opposed to when we got the cash. And for expenses, it would be the bills. So the bills would be closer to that point in time. So we're going to run that report. Having either method here doesn't necessarily mean we're on a perfect cash or accrual method, but it does mean that QuickBooks is going to use different kind of triggers to say when they're going to report cash and accrual. And by the way, when I talk about revenue and expenses, income statement or profit and loss accounts, the other side of those things are going to be on the balance sheet. So reports on the balance sheet, like accounts receivable or accounts payable, those are accrual accounts. They wouldn't be there on a cash basis because we wouldn't report anything on the financial statements until cash was affected. So if, for example, we bought something on a credit card, well, we didn't pay the credit card yet, our cash isn't affected, we wouldn't have the liability. It wouldn't be there under a cash basis method until we paid it off. And so therefore that would be kind of the difference between the two. So there's going to be different triggers under the two. The accrual is really the default that we should be basically looking at most of the time. And even if we're using kind of a cash method, and when we're recording, like we're recording everything into the check register on a cash basis, we're still probably going to want to see the reports on an accrual basis because there's usually some deviation. Usually we're not on a pure cash basis. An accrual basis is necessary at least sometimes, like when we buy a truck or equipment. We basically deviate from a cash basis if we have any accounts receivable. We may not always have accounts receivable, but if we do have some, if we report any, then we're going to want to see it on an accrual basis. So that's going to be that item. Then there's a couple items down here. If we have the collapse, we take a look at the collapse. That's going to give us a more collapsed kind of balance sheet, and it's going to reduce some of the categories, and that's going to be closer to what we might see in like a traditional kind of balance sheet. We're not going to have as many subcategories if we collapse it, but we won't be able to see as many accounts. So this will be kind of more of a simplified type of report. If we're trying to report or give this information to somebody else, then we might want to have a collapsed report, or we'll take a look at some other options for shorter reports of a balance sheet. Start with that. See if that's sufficient to whatever we give this to. If it's not, then we have ready the expanded report, and then we would expand it with the more detail of it so they can see the more detail. It just really depends who we're dealing with. When we look at the more detailed report, we're going to have more information that we can kind of zoom in and jump back and forth from. We also have some reporting options. We got the default, total in ascending order, total in descending order. Typically, the default is what you're going to want here. When we took a look at the totals in ascending or descending order, this is really going to affect not the major account categories. We still have assets, liabilities, and equity, but within each account category, we could have differences within each account category. So we'll go back to the sort by the default. And then if we had add notes, we can add a note to the report here. So we can add a note as we have here, and we can go ahead and print that out. we've got the 400 characters max for the note. Scrolling back up, we've already taken a look at the options for the email. We can email straight from here, which is nice. We can print it. We can print it to a printer or a cute PDF printer to save it as a PDF. We can export as an Excel file or PDF. We also have another compressing option here to compact the information. So you can take a look at that. I'm going to undo that. We also have this pencil down below, so if we select this pencil, we can adjust the name. So we can adjust the name of the report, we can adjust the balance sheet name and the company name. This is especially useful if we alter the report. If we make a comparative report or make some kind of percentages and whatnot, then it's no longer a standard balance sheet and we would want to make some adjustments to the name of the report. For more accounting information and accounting courses, visit our website at accountinginstruction.info.